I love municipal bonds. Municipal bonds are really fun. Fun, 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 fun. Municipal bonds, come and enjoy.
In this episode of Municipal Bonds Confidential, Captain Municipal Bonds will endeavor to further continue education and training fundamentally required for you to be an informed investor. Huzzah! At this point in your lives, if you are curious about municipal bonds, you probably have that curiosity because you have excess cash reserves needing to be placed into financial strategies and products that generate income for you to spend on whatever living budget you may have. This is especially true, if not the predicament, for those with nest egg type life savings seeking retirement income. If you have heard anything about municipal bonds, perhaps one of the first things you heard said is that the interest income you earn from municipal bonds is, in general, exempt from federal income taxes. Thus, the term, tax-free, municipal bonds. Furthermore, you probably also heard something about the interest income from municipal bonds from within your home state also being, in general, exempt from your home state's income tax. Thus, the term, double tax exempt, municipal bonds. But, are you aware that some states in the Union do not have a state income tax? This is a fact. It is not even a confidential truth. It is well known. This probably sounds like a great thing. One less tax to worry about. In a broader sense, states not taxing income is more and more becoming a unique statistic to U.S. public finance and municipal bonds, and something you as an investor should be well informed of. Clearly, the foremost consideration for municipal bond investors is, if you are an investor in a state that has no state income tax, you are not limited nor confined, so to speak, to purchase only municipal bonds from municipalities within your home state. This is because while most states, in general, exempt the interest income from state income taxes on municipal bonds originated within their own state borders, they do, in general, tax the interest income on interest earned on other states' municipal bonds. However, if you are in a state with no state income tax, the federal-level tax-exempt status is what matters. And because, in general, the interest income of all municipal bonds is federally tax-exempt, you are therefore able to purchase municipal bonds from any state, county, city or municipality throughout the country. The opposite is true if you are an investor in a state that does impose a state income tax. Especially for those investors in states that have high state income taxes. In order to have your municipal bond interest income be double tax exempt, from both federal and state income taxes, you would, in general, need to purchase only municipal bonds located in your home state. There are of course legalities and exceptions to all the state-by-state income tax situations, just because there always are. And there are too many taxable and private activity municipal bonds that have their own sets of rules. So everything I have explained may not be as applicable. All of which you need to speak to your tax and investment advisors in regards to. But what is of growing significance is the demographic, and even commercial, and business and industry shifts that appear to be happening with those states without a state income tax, as well as the current and future impacts on those states that impose high state income taxes. Please refer back and watch episode 15, Municipal Bonds Big 5 States. In that episode is listed the Big 5 states in U.S. public finance and the muni markets. New York, Illinois, Florida, Texas, and California. In that episode it is noted that there is current and vibrant growth in both Florida and Texas. This is happening for many and varied objective reasons. It should be interesting to note here, that Florida and Texas do not impose a state income tax. Florida is a wonderful state with great weather and beaches, but it could be easily argued that Florida's tax advantage, of not imposing a state income tax, clearly helps make Florida a destination choice. There are similar demographic moves happening with Texas. It could also be argued that by not imposing a state income tax, Texas is a popular destination state. So how is this significant to U.S. public finance and municipal bonds, and to you as an investor? Be it known that demographic shifts to states with no income taxes, such as Florida and Texas, will result in more population, more commerce and business and industry, and more government, more necessary infrastructure, etc., etc. All of which will result in more public finance and more municipal bonds. But what is even more significant, is if you consider the states on the other side of this shift, those states that are losing population and commerce and business and industry. Consider the other 3 states on that Big 5 states list, New York and Illinois and California. Could it be said these three states lose population because they impose high state income taxes? And what is worse for states that lose such demographics is the corresponding taxable income revenue losses. How big a negative impact will be felt in future budgets? It could be easily argued that states with high state income taxes will be negatively impacted as taxpayers, especially those in higher tax brackets, vote with their feet and move away, along with the taxable income base. All of which could affect the creditworthiness of those states' current and future municipal bonds. Be forewarned, here is an unofficial list of those U.S. states that do not impose a state income tax. Please double-check this list. Call everyone. Also, call anyone you know of who has moved to any of these states that do not impose a state income tax and ask how important the improved tax situation was to their decision. We begin with the aforementioned, Florida and Texas. Next is Washington State. Washington, come on down. The state of Nevada also does not impose a state income tax. Thank you, Las Vegas and gaming revenue. Alaska is on the list of states with no state income tax. Thank you, oil revenue. Wyoming is on the list. And so is South Dakota. Also on the list are Tennessee and New Hampshire, but double-check these as they are either still phasing out their state income tax, or have a tiered tax situation where there is no income tax on some income types, but an income tax on other specific types of income.
I love municipal bonds. Municipal bonds are really fun. Fun, 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 fun. Municipal bonds, coming at you.